Welcome to the Knakal News Network. Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Welcome to the Knakal News Network. I'm Mike Stoller to discuss with Bob Knakal the state of real estate today. So Bobby, let's talk a little bit about the hot multifamily market.
The multifamily market is always the market that has the most activity. There are more multifamily buildings in the city than any other type of property, and they're always the property that's in the highest demand.
So, with all this multifamily housing over there, what are prices at these days? What are cap rates? What are people paying? And what's the best locations?
Well, there's a lot of questions there, Michael.
I think, you know me, I have to answer
relative to values, cap rates have clearly compressed. In Manhattan, for elevated properties, cap rates are down below 4%.
You see, but I like 7-story walk-ups. They're really good for exercise purposes.
Well, even 7-story walk-ups are trading at less than 5 caps today. It's very tough to find a property yielding more than 5% anywhere in New York City.
One of the big problems that we have is we're on an island in Manhattan, and we have other boroughs over there, and unless we do some landfills, it's not that easy to build new housing.
No, well, that's why incentives have to be created. I think politicians need to realize that they have tremendous currency in the form of air rights. And to the extent that they can give air rights bonuses to developers who will get the ability to build additional free market units, to the extent they build some affordable units, that's a way to bridge the gap and create more land.
Of the 4 boroughs, where do you see the most activity and the highest price increases for multifamily?
Well, clearly Brooklyn's the hottest market. Brooklyn is the biggest market by number of multifamily buildings, and I think on a relative basis we've seen more price increases in Brooklyn than anywhere else. In fact, new construction today in Brooklyn, we're selling buildings now that were built as condos that were converted to rental that are selling for upwards of $1,000 a net square foot.
How about the Queens market? Because there's a lot of things. Flushing is very active in parts of Regal Park. How do you see that?
Queens is a very different market from Brooklyn. There's less new construction going on in Queens, although there is some. But Queens is traditionally has been a market where people have owned properties for decades. So when a prime asset becomes available, there's almost a feeding frenzy for it amongst the folks that are very active buying multifamily.
So now let's go to that other market that very few people, because you have to take the ferry or the bridge, Staten Island.
The Staten Island market has been one in which we've seen a lot of new development occur, particularly in the 05 to 07 period. We actually sold a lot of those projects in the form of note sales.
And what about the home of the Bronx Bombers?
The Bronx market has traditionally been the market where you could get the highest yield on your investment. Cap rates have always been the highest in the Bronx. However, those cap rates are compressing now in the better areas. We're seeing 5 caps or even sub-5 caps in the Bronx, which is the first time that's happened. And the market is very, very active.
It sounds like the multifamily market is only getting better, even with difficult, rising interest rates. It's still going to continue there. The big questions really are taxes and other matters. And thanks for being here today on the Knakal News Network.
Thank you, Michael. In summary, the multifamily market in New York City continues to be the product type in the highest demand. Cap rates continue to compress as investors battle to gain control of these highly sought-after assets. For the multifamily market, the policies of the next mayor will be tremendously important.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.